Bank team, we're going to take another look at the market today. This video is sponsored by Delta Exchange. Okay, so if you want to support this and get this video coming out every week, make sure to sign up using my referral link. So let's get straight into it. So the subjects today, I just want to put some context into what is going on in the markets, all right? And so we just have to discuss these topics before we continue towards the charts, because these are very important narratives or subjects to be aware of, okay, especially when we are seeing this kind of price action, okay? So keep in mind that often, or we are currently seeing end of month flows. So very often, depending on how price action is, end of month flows is usually banks and whatnot, market makers repositioning their portfolios, okay, or profit taking and etc. You also have options expiries. So then we go off, as we know that in general the last week of the month, especially on a Friday when there is options expiries, we tend to see more volatility, okay? So there can be much more sharper weeks, larger candles, okay? And then we have to recognize that there will always be a narrative in place. Okay, so current narrative at the moment is risk off Friday, meaning that we're seeing the Delta virus, new strains, lethal strains in South Africa and whatnot. All right. And then we have basically that many banks are anticipating rate hikes, or at least Goldman Sachs were posting an article that they're expecting rate hikes in June 2022. We're starting to taper in November. I'm not sure if you already started, but we will start or have started very soon. Then we have liquidity. Okay, so I'm not sure if the markets are open today, if they were closed yesterday. Regardless, we had Thanksgiving. Okay, and then we're moving towards the weekend. During the end of the month, okay, so there will be lack of liquidity. Okay, so I will touch upon this subject soon again. Okay, and then we have levels, void and SR. So basically, you still need to stick with the levels you're interested in, meaning that you can't just sell at support. So if you have a level something like this, okay, and then you have a very clear SR, right, and price has expanded away from that, and we created a top, and we are selling off, right? These levels will still be important when we revisit them, right? Even though price can wick through it, but we're anticipating a reaction, meaning that even if price extends through them, there will be buyback, and when the next month opens or whatever, we assume that we potentially can get enough buyback to continue the trend, right? So we cannot know, right? Give me a second there. Know if price will stop at the level, stops before the level and continue, or if price will actually just move straight through it, right? So we have to use time aspect, okay, time of the day and whatnot, to guide us through basically this process. So then we have risk management, spot vs leverage. So when we are in the end of the month flows, okay, and we're having a risk off environment, you don't want to be heavy in leverage trades. So meaning that if you're already in trades, right? So basically, let's say you have a consolidation, price came back down, right? And you took an entry because price looked decent. You have a stop below that low, and price extended. You want to manage that trades and put the stop maybe close to break even. If you want, you can hold, of course, your full stop as long as risk is in place, etc. When price gives all that back, then you say, all right, so maybe I'm wrong on this idea that we will see then continuing bearish flows towards the close, the weekend close or whatever. So I'm sticking to my risk management, okay, and then I'm waiting for potentially get a nuke, and then I would be rebuy the asset I'm interested in at a lower price the next month, right? That is basically when it comes down to leverage trades. So when it comes to spot trades, right? So if you have this environment, price comes down, you can take an entry, okay? You can dollar cost average into a larger area because you're planning to hold this for a month, maybe 2 months, depending on the price action. So the position size you have on spot trades should be significantly lower, of course, than leverage, right? So when we say spot, we are talking about not going all in on an asset, but rather potentially, let's say you're putting out 10%, 20%, whatever of your equity, okay, for example, to bid Bitcoin between, 50K and 60K or whatever, right? So you dollar cost average in towards the levels of interest. Putting all of these aspects together, okay, understanding that when we have end of month flows, okay, we want to be cautious, right? Especially when we're having a narrative that is pushing the price as well. Okay, so then in addition, we have closed markets, okay, and we have weekend price action coming up, okay, and then we have void and SR levels sitting below, okay. So all of this, okay, implying that, you should be cautious, okay, and etc. So let's go and take a look at a few charts. So now that we have that out of the way, so let's discuss what we are seeing. So we talked about these particular levels, for quite some time. So, you see how took the top, retest, selling off, sideways price action. Looked like we could have seen here a buyback, right? But once you get this kind of selling off as aggressively, right? Meaning that potentially, we are not holding. So, and we have this void here on the volume profile as well as that we have been discussing. So, how can you trade this? So one thing that you have to look at always, the level of accumulation and distribution, meaning that the larger the structure, okay, so this is the level of distribution, the same as this one at this particular level, right? And the level of accumulation was during this level and whatnot. So you have to look, at how large and how long of time we have been basically distributing, and how price is moving away from the level, how significant of retest. So in this instance, right, we don't have any massive retest, meaning that we haven't closed any of the void above there, right? So meaning that as it moves lower, it will get much weaker because it hasn't accumulated as much sell pressure as it would have if price would have retested. So if you had this price coming back up here, then coming back down, right, then the accumulation will be much greater and they will have more force, okay, to sell off more aggressively. So when we don't have this, it means that price most likely going to become much weaker, right? So regardless of what is going on, how the charts are forming, the importance here is to understand what levels are of interest. What levels are of interest, right? So we have this particular level, okay, is of high interest. 50K, 48K is basically a must buy, right? For several reasons, as we have a very clean SR and we have this void that would have been closed, and then we have this SR, of course, these consolidation at these at those levels, and then if you use just a simple fib tool, even from the absolute low there to the high, you see we are at exact 50%, and if you use the previous pivot, okay, it's the 70% retracement. So the whole. When I look at this price, for me, I look at this level as one. Okay, I can't deem any of these as more basically significant than others because, and there's one major reason, is due to the lack of liquidity within, especially within the volume profile, as you can see. As the bar shares are extremely thin, okay, so to get a wick in towards these levels, okay, of aggressive sell-off, doesn't take a lot of force to happen. So and the reason why I'm telling this is because if you are taking a trade, so let's you enter right there, you can't have a stop in the middle of a move because there is nothing or nowhere you're hedging basically against, right? So that means that if you want to take a trade like this, you need price action to unfold to show you that, potentially there is a bottom in, okay, and you bid that looking for higher prices, or else you have to stay on the sidelines and wait and hope that potentially we're getting lower, okay, and then you can hedge below this one, okay. That would be, a decent level to hedge below. So, so when it comes to these levels, just want to show you this once again. So as far as trade goes, let's say we can target, and just to use this particular chart, right? So let's say 75K, right? So let's say 75K. If price comes lower, okay, you will have a better R, okay, a high position size, right, as far as leverage trade goes, and then you can hedge. Give me a second, just want to see if we have the pivot right. Okay, yeah, so it's good there. So that means that the lower price comes, lower price goes, the better for your entry, okay, because you're getting a high R. It's still valid to even take the trade at these levels. It will just give you a less of an R, right? So the probability of the trade is as good. It just means that you have to lower your position size entering. So, or else, of course, the best or the other option is just to wait, to see for more price action. See if you can get a low, breaking market structure, okay, and then either jump in or bid the retest, okay, and then look for expansion. Okay, and that is the only ways you can play it. Now, this is leverage trades, and let's just discuss spot trades. Okay, this is if many are playing only with spot, you can take one position, right? So even if you took a position here at the lows, you can dollar cost average into 3-4 ladders. Okay, and you assume that price won't go below 40, okay, so meaning that these levels, okay, are the good levels to basically bid, and even if you do get a larger sell-off, you would assume that at some point price will come back up and retest. So if you're insecure about your position, you will then potentially have a chance to get out in break even and whatnot. And of course, if you're absolutely wrong on the trade, you just have to take the loss. So that is where the risk comes in place. So if it does occur, a very bad market environment, you just have to take the loss, right? You just have to. That's a part of the game, right? You have to take the loss, the same as you have to take profits. It's just a part of the game. If you never take profit, you will never make money. If you never take a loss, you will keep losing money, right? So, it's basically the worst thing you can do to never take profit and never take a loss, okay? You're just doomed to lose money. You can't make money in that way. You have to be comfortable taking some losses. So, let's go out and just take care. You can see how this is a weekly chart. Let's go to the daily chart, looking at the S&P 500. So you can see that, on a weekly basis, you can see that we have a massive uptrend here, and we have a very large inefficiency with this, which is basically 1, 2, 3, 4, 5 consecutive weekly bullish candles. Okay, and then you get 2 small body candles and then the sell-off. So let's go to the daily now, and I just want you to focus on this price action. This is an 8-hour chart. And as the price here fails, right, to break above, price comes lower. And, what we can assume is that as price coming towards 4,500, you would assume that you're going to see some kind of a buyback. You want price to start consolidating sideways, build liquidity to become stronger, okay, to potentially push higher. Okay, so, if you go back to oil, okay, so the level here we discussed, we nuked straight into this particular level, and you can see how this was building a lot of force. And I mentioned this in several videos in the Discord channel as well. As you can see that these sell-offs, okay, you see how price is building liquidity, okay, and by the way you can see that is that price is accumulating, and then the sell-off, this is the sell-off, okay. So from the accumulation, okay, price comes back down, accumulates, price comes back up, 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 accumulates, okay, and this is then the sell-off, and that is created by the force that the price action basically has delivering. So once you get these sell-offs, right, into key levels, that is when you're going to start getting interested in entering trades. And remember that, for example, I'm interested in taking a long on oil, but I will never take a position on oil, at Friday, end of November. Okay, that doesn't make sense. No point in doing that. Then I'd rather wait, right, for next week. Even maybe we get slightly lower, that would be even a better entry, at let me give me a second there, in towards, for example, these levels where we have, even stronger support, right? If this is the low, then, you would see buyback, price will then start accumulating sideways and building this same structure in the opposite direction, okay, before you're getting a price move to the upside. Okay, so you always have to determine these kind of things, and that's why you need time aspect to navigate through the markets. So here looking at, you can see how USD CAD is actually moving higher, and Euro USD moving lower. Okay, so and cable as well finding some kind of a support. All right, so when we are seeing this, right, it doesn't really make sense. It's basically everything is selling off. So here, if you look at the yields are selling off, dollar is selling off, Bitcoin is selling off, oil is selling off, S&P 500 is selling off. Okay, so basically only gold is catching, a 1% bid today. So where's all the money going, right? The money is basically disappearing from the market. Doesn't go in USD, doesn't go in any particular asset. Okay, so this is often happens end of month during these kind of circumstances. So let's go to the weekly chart. I just want to show you on Euro USD how you're getting the sell-off in towards this previous consolidation we discussed, decent buyback, right? And these are the things I'm trying to explain, is that when price comes back up here, accumulates here, is the same thing you were seeing in oil, and then it sells off. Okay, so this is the force created by these retest and distribution patterns, and then you get the sell-off. After the sell-offs, that is when you want to start getting interested for a potential reversal. Okay, and that is what we are looking for Bitcoin as well. Okay, so let me show you this. Okay, so the force is being created by these levels. Okay, and once price extends, that is when we're starting to get interested, and we're using the levels and the void to determine when our entry gonna be. And then, of course, the time aspect, which is my favorite, right? So you always have to use, especially New York Open, beginning of the next month, beginning of quarters, end of quarters, beginning of the year, end of year, etc. So let's go into some layer ones and discuss the levels, right? So I think Ethereum still looks good. I'm still in this trade. Okay, so I would just monitor this. I don't really mind taking a hit on this as far as leverage trade goes. I will then try to re-enter closer to 3600. Okay, so let's go to 12-hour chart. Just want to show you these levels. All right, so this is a decent level, right? So I'm still confident in this particular level. So if that gives in, that means that or basically if Bitcoin sells off towards 50k 48k, right, we would expect Ethereum as well to take a hit towards 3500, which would be the next level I'm gonna try to enter. All right, so next levels, take a look at a few charts. So Cardano selling off in towards this key level. Okay, I don't want to go in detail. I post a lot of these charts on my Twitter feed as well. So you can see how we're selling off. And the force, as I mentioned earlier, right? So come back off, okay, creating this, holds the liquidity, comes back up in towards the same level. So the whole accumulation for the sell pressure is coming up from this level, and this is the sell-off. Okay, this is the aggressive sell-off. And it becomes more and more aggressive as price extends lower, right? And that is when we are getting interested. So, as I said, anything between, so be laddering in, I think, from 1.8 to 1.4. Okay, it's my dollar cost average range as far as spot trade goes. So then I will wait for next week to look at PA and potentially take some leverage trades. Okay, so I think this looks more or less or trying to bottom. Solana as well is just taking out the low. I'm still in a leverage trade here on Solana. I'm not sure what I'm going to do with it. Okay, close to break. My entry is 200. Okay, so I'm not too afraid of this particular trade. If it really looks bad and sitting at lows, I might just exit and then try to get in around 160. Okay, 180, 160 between these levels at a later point, just in case you get a more aggressive sell-off. Let's take a look at AVAX. AVAX straight into the level of interest that we have been discussing, or I posted. Nearly touched it. Okay, I didn't enter any trades yet. We will see. Okay, still looks decent. Algo, same concept here. Taking out the lows, expected some sideways price action. Regardless, the key levels basically, to bid would be then, the extension, as I mentioned earlier, right? So if this is creating force to basically sell off, you will see an inefficient move selling off in towards these levels. Then you want to enter after the move has occurred, right? So basically you're waiting for price to run. Okay, so here you're seeing the same here for Algo, Cosmos, selling off, right? So these levels here is just accumulation levels for spot trades, and then you wait for the leverage trades, okay? DOT as well had this fractal, okay, moving exactly as my fractal here, right? So these are the levels of interest. So I'm fairly tempted to enter a leverage trade, but I'm gonna wait until next week, okay, due to, of course, end of month flows, right? But regardless, I think this looks really decent. It's a daily chart. You know, we sold off 40%. You know, you might get 20% lower. You know, so you know the key level. Okay, just want to explain this so everybody's aware. These accumulation levels or consolidation, this is where liquidity holds. So as price extends in towards these levels, I'm confident that price gonna catch a bid, okay, or confident. That is what I'm expecting, right? So that is what I'm gonna trade. So you know, in a worst case scenario, we might get lower, but you can see by the wicks here. So these wicks here, okay, this is where the key liquidity is, okay. So if we do get a significant sell-off, right, a massive sell-off, this is where the key level will be, right, the absolute key level, and these levels are where you are bidding with closed eyes, okay. So I'm still in this trade, as I mentioned before. My entry is around 22, 24, something around these levels, and then as I was holding at these levels, and a dollar cost average in 2-3 positions, okay, and then I will wait for my last ladder. This is spot trades, okay, and then next week gonna look for leverage trades. So yeah, that's about it for layer ones. As far as DeFi coins, you know, they're not looking too good. They're just searching for liquidity lower. Okay, so you know, you can see how, for example, GRT, that which is already fairly low, you know, just holding around the support levels. Okay, so still holding those particular trades. You know, Aave and Comp are the ones that, you know, looks not good at all. So we're just going sideways in massive accumulation range, basically. So you can assume that these levels, right? So if you want to enter these particular trades, right, you want to enter within the lowest spectrum as price extends. So the extension, right, this is an extension. Then you have consolidation, sideways price action, and then you assume for the next extension, and the extensions are the one you want to buy into. Okay, so you can see this was an extension. Here you got the extension. Okay, so extension is basically price, you know, going parabolic in one particular direction. Okay, and those that is when you want to sell or buy into, right? So if you're getting a sell-off, a parabolic sell-off, so to speak, you want to buy into those levels, and when you get parabolic extension upwards, that is when you want to take profit. Okay, same concept. What else can we take a look at? Nothing too much here. Engine coin, you know, looking decent within the structure. Nothing for me to buy, right? So regardless of how high it goes, I still just want to buy within the previous consolidation, right? Especially as it has extended. You know, my level of interest would have been will be around these levels, right? You have this clean SR, you have this these weeks, this consolidation, right? So as the market sells off, price going sideways and doing some kind of a pattern like that, then I would have could have jump into a trade, right? And then keeping a stop below the previous low, and then go higher. And as price extends, you move your stop into break even, right? That's how you want to play those kind of charts. So Theta, Matic, you know, give me a second here. So still same here, right? So you see price is basically just compressing within the same levels, okay? Just compressing within the same levels, and you will see that these sells, those particular sell-offs are usually much smaller in regards of many others, right, that has already extended. So, you know, even if price comes all the way back down like this, I'm still expecting, okay, price eventually to move higher. That's why it's important for spot trades to dollar cost average as low as you can get. And when you're having leverage trades and you're wrong on the idea, you just take the loss and you move on, okay? Matic, you know, decent as well. So, you know, where is the support? So the support is this previous consolidation, okay? This is where you are confident and you don't want to lose that, right? So if price comes back up and start doing like that, then you can say, okay, so I'm wrong, absolutely wrong on this idea, price looking to extend lower, right? So until you get that kind of price action, you just have to be confident, in this environment and see, how price basically unfolds. SRM looking, in my opinion, decent, right? I think dollar cost averaging in towards these levels. So the sell-off here, the aggressive sell-offs comes from this particular accumulation of price, okay? Sell-off, retest, and then the extension. Once the extension is done, you're getting signs of it, meaning that you want to see some kind of sideways price action. So giving an example of that would be after you're seeing this extension, you're seeing how price sideways, the last extension, reversal, and then you see price grinding upwards, okay? And we have created space. I talked about this many times in our Discord group. You want space. Without space, price won't go because the space creates accumulation levels. If price doesn't accumulate, it can't just, price can't just expand like this. It doesn't work like that, right? You have to understand that it takes many daily candles, okay? Daily candle, daily, smaller daily candles, right? And then as price extends, right, you're getting larger and larger and larger candles, right? And you have created space in between this level of accumulation, and then you get the expansion, and the expansion is where you want to sell. So what else can we take a look at? I don't see any other interesting charts. We can take a look at Link. So Link, moving much lower than I expected, right, due to market conditions, right? So, if price hasn't already extended and we're getting these kind of sell-offs, you can't do anything about it, right? So, still in the spot trade, as I've been for a month now. So this level should hold. Okay, I'm expecting this level to hold. So we will see how this unfolds. Come back up, then that really should do it. The third time, it should crack the highs there and go parabolic mode, like I'm showing in this fractal, or else it will be just a retest and price will just grind lower towards this previous level of accumulation. Okay. So yeah, I think that's about it for today, guys. I hope you got something out of it. Peace out.